So you're brand new to the stock market or really any market and you're wanting to learn more about just the basics, and that's great. We all start off where you are when we're, like I said, brand new, just getting started, and we're beginning to dive into this world known as the stock market and just financial markets as a whole. Maybe you're wondering, all right, Clay, I get it. There's this thing called a stock market made up of stocks, and these stocks have prices that change and fluctuate. But what is actually causing the prices to change? And that's a very foundational question. It's a very good question, and I would say good on you for wondering that, good on you for asking, because good, you're trying to get yourself a good, firm foundation of how all this trading, investing works out. So the best way to illustrate this is just to kind of map out a couple different scenarios. So right here we have a stock, and this stock is ABC. So I'm going to get really, see, my creativity is just off the charts, but ABC, and you have two different people looking at this stock. You have over here what are known as people wanting to buy the stock. And then over here, you have people that are wanting to sell the stock. And these two people, buyer and seller, they make up the market, right? That's what a market is. People exchanging goods and services. And in this situation, the good that they're looking to exchange is stock ABC. So to assign a little bit more to this, what is actually going to make this move? Well, let's say that over here, and this is multiple people, but this just represents it, but there's multiple people, and these multiple people in total want to buy 20 shares. So that's what a stock is called. It's a shares of a stock. So stock, shares, they're one and the same thing. But as a total, people want to buy 20 shares. Okay, 20 shares at what? Well, they want to buy 20 shares at $50. So to just go through it, as far as stock ABC is concerned, there are 20 people that want to buy the stock at $50. Now on the flip side, let's say this, that there's sellers out there that want to sell. But let's say in this situation, all these sellers over here, they want to sell 25 shares. So here's my first question. Do you see a problem here within this story? Do you see an issue? So I'll kind of stall for a second. If you want to pause the video, go for it. Like I said, the question, do you see a problem right now? If you're saying, well, Clay, I see the problem. The problem is you said that people were willing to buy 20 shares, but there are people that want to sell in the amount of 25. And I understand basic numbers. 25 is bigger than 20. So what's going to happen? Because if all these people sell, well, like I said, the numbers aren't matching up. So the next question becomes, that's true. So then there's another group of people. And this group of people back here, let me keep changing up the colors here. So we have another set of buyers. Again, they are a buyer and they want to buy. And they want to buy, let's just say 10 shares. But the big difference here, and what makes them different, other than the amount they want to buy, more importantly though, is they are willing to buy. So for whatever reason, they're like, no, I don't think it's a good buy. I don't think it's worth $50, but I think it's worth $49.75. Again, for whatever reason, they believe that it's $49.75 instead of $50. I mean, there's unlimited reasonings, but they have some sort of reason that, you know what? Yeah, I think it's $49.75. So when these people make the decision to sell, what is that going to do? Well, they're going to go over here and say, yeah, you know what? I want to sell. So for 20 people, they're going to be able to sell at $50, right? Because, well, that's the number. 20 people, or they're able to sell to the 20 people that want to buy. But of course, with the math here, what does that do? Well, that still leaves 5 shares that want to be sold. But here, because they're gone, and this is also gone, then that means that this whole thing has been eliminated. And now it's the next group up. And the next group up, according to our story, is what? Well, they want to buy at $49.75. Now you look at these numbers and they work out, right? You have 5 people that want to sell, but you have 10 people willing. So these people, are they going to be able to sell or aren't they? If you're saying, well, yes, Clay, they are going to be able to sell because there's only 5, but there's 10 over here. But what is the but? The but is, but they're not going to be able to sell for that $50. They're only going to be able to sell for $49.75. So these people now have a decision. They can say, you know what, do I want to sell it for $49.75? Or do I want to see if somebody comes along again and says, you know what, I'll buy it for $50. That's the choice that they'll have to make. But as far as the stock price is concerned, the price just went from $50 to $49.75. So that's what made the price move. At the core, it's just good old-fashioned economic supply and demand. There was more supply here originally than there was demand. So because there was more supply than demand, prices are going to go down. And in this situation, they go down to $49.75. And if these people decide to sell, well, then there you go. But that is how the price went. You know, price per share, if you know, some more lingo, some more terminology, but that's how the price per share went from $50 to $49.75. And the exact opposite would be true, meaning if there was more buyers than there were sellers, again, supply versus demand. So if there's more demand than there is supply, well, then the supply of the sellers are going to get wiped out at one price level. And then the next group of sellers will be up, and it'll be up to the buyers if they want it. If they say, well, I don't know, do I think it's worth that amount now? So that's all it is. It's supply versus demand. The number of buyers versus the buyer of sellers, and then the number of sellers versus the number of buyers. And that is how things work out. Now, this is all, I should note, taking place in fractions of a second. Fractions of a second. And so, especially in this day and age of technology and computers, I mean, this stuff, I mean, these prices are flying all over the place. If you've ever heard of level twos before, if you haven't, that's totally normal. That's totally fine because you're brand new, just getting started if you're watching this video. But there are tools out there that traders and investors use that illustrate all of this. And like I said, boom, 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 boom. This stuff is all happening. But slowing it all down and looking at it in a very step-by-step fashion, this is what is going to make a stock price move. Just supply versus demand, buyers versus sellers. Hopefully that can help you out. Hopefully that can clear up and give you a good firm foundation of what exactly is going on within the market. If you do have any other questions though, by all means, please leave those down in the comment section. I take pride in answering all comments. So if you have questions, like I said, let me know down below. And there are other videos, so maybe I might not necessarily answer you per se, but the answer might just be me linking you to another video that I've done that will answer your question. But yeah, please leave those questions down below. And you know, if you have maybe any other analogies that you thought or you think might help other people out, yeah, definitely share those down below too. So hopefully this helps you out. If you like this video, if you would like me to make more of these kind of 101 type videos, the easiest way to communicate that to me is to hit that like button, leave a comment down below, and also just as a whole, check out my channel, and hopefully you decide to subscribe. But thanks for hanging out. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.